Welcome to today's episode, From Startup to $250 million, How to Use Accounting and Finance to Grow Your Business. This is our series. Today, we're going to focus in on one specific group, the group from 50 million to 100 million. And it's going to be an exciting episode. And today I want to introduce to you Eric Rourke, who's the CEO of Rourke. And of course, I'm Thomas McMillan. How are you doing today, Eric?
I'm doing fantastic, Thomas, and welcome to everybody. I hope you're having a fantastic day. Thomas, 50 to 100 million, we're talking big bucks now.
Yeah, this is big money. So what is like the name of the game in this one? So from 50 to 100 million, what's the key point before we dive in?
Certainly. When you're talking 50 to 100 million, the name of the game is about efficiency, efficiency, and efficiency. And in case you missed it, it's about efficiency and being able to maximize and drive dollars to the bottom line.
Well, for this section, I think we've talked about in previous segments about people, process, and systems. Let's jump into people.
Certainly.
All right. So in this 50 million to $100 million range, what's the very first thing we're probably going to be thinking about when it comes to people around finance and accounting?
Certainly. And look, every one of these stages, you're going to want to look and assess your team to be able to help get you there. But really, when you're talking 50 to 100 million in revenue, you're starting to think about your CFO, bringing on a CFO. And there's a lot of facts and circumstances that go into this. Look, if you're private equity owned or VC backed, you should already have a CFO in place. If you're privately held, you really should start looking at the CFO because there's just so much that are going on there. And a lot of people get confused the difference between a CFO and a controller. And I kind of say titles are like colors, right? If you have the color red or the color blue, if you look at my background, right, there's light blue that's in the little R's and there's darker blue that's in the background. Well, people kind of go along that spectrum within a given title. But the key signs that you can see a controller versus a CFO is the controller is really focused on the past, right? Reporting the numbers. So it's get the information in, summarize it, and report it out. We're talking about the history, we're talking about the budget, we're talking about the budget to actuals, and getting information out to third parties. And that's typically more what accounting does, is they focus on the now and the past and reporting and deadlines. What finance does, and where your CFO comes in, is they look forward. So instead of your spotlight shining backwards, you got like a train light shining forward so you can see brightly. And your CFO is going to help drive that. Now, if you don't have the accounting right, that's the basis for all your numbers to do finance, then you really run into trouble trying to do a good spotlight. But your CFO is going to help drive your business. They're going to start talking to the bankers, lenders, investors, if you're looking to exit. And there is different types of CFOs. You really kind of want a growth CFO in this phase. But they're going to be able to handle multiple departments because you're going to have to start delegating that and then being able to manage multiple departments, as well as working with your tax people. And one of the key areas of a CFO is they're really relationship focused. So they're going to be the people that are starting to be that person to manage those external relationships within your organization.
So at this point, we're really introducing finance into the organization itself. If it hasn't happened already you mentioned some of the other groups, it is definitely in place now. It's got to be in place. Can you talk a little bit about aside from accounting, you've added this chief financial officer, what are some of the things, or what's another type of role that you might add inside that finance group?
Certainly. And what happens in the controllers in the smaller companies, they are the financial person and they provide the financial analysis, but there's limitations because there's only so many hours in a day. When you get that CFO in, you're going to want someone to really work with them and empower them. And that's usually a senior financial analyst, right? Someone that comes in, they usually start establishing that finance arm. They'll take over those reportings and internal management reporting, budgeting, forecasting, the ad hoc analysis. And they're really that key right-hand person for that CFO as well as the accounting group. We see that work in a lot of companies and it's very successful.
What are some things you need to think about to, get to that next level when you look at your staff?
Yeah. And again, when we look at every levels, there's changes, but when we're talking about efficiency, you're going to want to look and review your staff. Are they the staff that are going to take you? Are they the $100 million year staff, or are they the $50 million year staff? And that, you may say, well, what does that mean? I mean, if you hire the staff that can get you and do what you needed at 50 million, are they going to be able to get you to 100 million? Sometimes the answer is yes, right? Sometimes the answer is no. So what I look at is each level, look at your, in this case, 50 to 100 million, look and see if you have $100 million year staff, not $50 million year staff, because they're going to be the ones who help get you there and cross the chasm.
So what type of work are these folks helping with when it comes to financials and different things? I know we went through a lot in our last series, but when it comes to financials.
Yeah, this level is really different in the fact that you're going to have your true accounting side right now, right? And you're going to want to make sure you staff that appropriately. Obviously, you have your clerical level that people start filling in, but you're going to probably want to beef up your professional level of accountants, a staff accountant, senior accountant, depending on your industry, cost accountant, project accountant. I mean, there's all sorts of different titles in their revenue for software, as well as your controller. So you support that base underneath, because look, you're going to have to, at this level, you really need to convert over to GAAP and accrual financials, no matter how hard you're holding on. It's, not a requirement, but more likely than not, something's going to come out and you're going to go, God, I wish I did that. So now's the time to do that. But you got to build in that professional level to support that controller and that CFO, in addition to what you currently have going on the finance side.
So just all across the board, it's making sure you have this infrastructure that way that you can be efficient.
Yeah, I mean, really, Thomas, if you don't have the infrastructure in place, at this level, there's so much going on, so many moving parts, you are most likely missing out on profitability. I'm not really one to say 100%, but I'm feeling very strongly in your organization that there are opportunities that you may not be aware of. You just need to build that right infrastructure in place. And there's so many opportunities that pop up all the time.
So we just talked about people. Let's talk a little bit about process. What are some process changes that you'll notice right out of the gate with the $50 to $100 million business?
Yeah, the first change that you're going to see, you should have policies and procedures in place, but these policies and procedures start becoming so key, because when you have the tribal knowledge, if those people go away, then you actually run into trouble. So making sure that you have good documented policies, procedures, internal controls from an accounting perspective, very important. And those are just, what are internal controls? If I were to sum it down or boil it down, they're basically checks and balances to make sure things are right, and also to make sure that things, can't go wrong, if you will.
What do your rhythms look like within a business?
Yeah, and that's a great point. You're going to really want to look and develop reporting rhythms. So you're going to have your monthly close process, because you need to get information out to people. And some people, is it a soft close? Is it a hard close? Again, another video for another day. But you're going to want to have your monthly close and have a certain level of close days. You're going to want to have your certain rhythms on your management reporting, what goes out to what, by whom, because people should already be relying on this information. Your budgeting and forecasting cycles. You're probably doing an annual budget, and depending on your business, maybe a quarterly forecast to see how things are going. Then you have things like your tax returns and what your tax CPAs need. You have your audits or your reviews, what they need. And there just becomes a regular cycle of reporting, and there's so much of that going out, your bank reporting. So it's really just developing those reporting rhythms, getting them locked in, getting the staff that execute those so you can rely on them timely.
So we talked a little bit about GAAP in the people portion. With GAAP and accrual, what changes, is there any changes in your process at that particular point in time to that 50 to 100?
Yeah, and I think I may have alluded to this earlier, Thomas. I mean, look, you got to convert over to GAAP and accrual basis when you're getting to this level. Does that mean there's a requirement? There's going to be a lot of requirements. It's whether you got to that one yet or not. But if you haven't got there yet, you're most likely going to be getting there very, very soon. So it's time to rip off the Band-Aid, make the conversion. It's going to help you run a better and stronger business.
One of the things that happens is you might be looking at different areas of expansion of your business. Can you talk about like process changes when it comes to like maybe geography or just international?
Well, and this is where process and systems actually kind of merge together, candidly, is as you start going out, you're going to start moving out geographically. That's just going to be a natural thing that's going to happen. Companies at this level and earlier, but at this level typically are looking at international expansion. So if you don't have the processes in place and developed, it makes it very difficult. It's like sandpaper and trying to move forward, building things out. So the process is important, the systems to be able to comply with that. And look, if you don't have that, the compliance and the reporting becomes even more complicated with the expansion. So it becomes even more difficult to do these things. And that's where process and system really come together to really drive synergy and efficiency for your business.
Mm. So let's talk about systems, because like you just talked about the synergy between processes and systems. We touched on a little bit in the last segment about ERP. I guess at this
Yes.
point, what's the stance on ERP in this particular area?
I mean, just as we're talking about with the expansion, the processes in place, just the sheer volume of employees most likely that you have, you're going to need an ERP system. If not, you're losing out on a lot of communication gaps, streamlining, efficiency where people can go in. So look, Thomas, the record that I've seen is QuickBooks Enterprise. I've seen it $1 billion a year company, right? So they waited, they held on. Now, granted, they had a back office system to be able to help support that, but just in the case of that company, they converted just in the nick of time. And they ended up crashing the QuickBooks with so much that's going on. But when they got to the next level and they started working with the ERP and started launching it out, it was just a revelation of, oh my goodness, why didn't we do this earlier? And I think if you haven't already went through that revelation earlier in the business, the 50 to 100 million, you're definitely going to save that.
Mm. So, wow. So talk a little bit about just your IT infrastructure.
Yes. And so a lot of times when you get the CFO, they'll have HR and IT as well that reports to them. Different companies have different methods and thoughts of doing things. But this is the time where your CFO and your IT team are really going to want to build the infrastructure for your future growth. Again, we're talking 50 to 100 million. That's going to look more geographically dispersed potentially. So you're going to have to really support and build that IT infrastructure to do that.
So another thing that really gets fueled by systems is the reporting, right? Talk a little bit about reporting, what that might look in this stage from 50 to $100 million.
There's so much reporting goes to everybody, right? Again, if we start looking at the three major areas, taxes, you got state taxes, you got local taxes, you've got property taxes, you got taxes everywhere, right? Licensing, things like that you have to do. If you look at internal reporting, there's so much internal reporting that has to happen. This goes back to process and system. You want the process to be able to produce that, and you want the system to be able to push it out to people efficiently. And then lastly is going to be for the external people, and the external people being lenders, investors, bonding agents, other folks that are going to be relying on this information. So really the reporting demands increase tremendously. So you need to have all this in place, the GAAP financials, the audited financials to your lenders, to your investors, to your potential people that want to acquire you, and then having it ready to get the capital that you need to acquire people. The reporting is so important, streamline, and I'll say it again, efficiency, efficiency, efficiency in that process will net you great results.
Let's talk strategically about the business. What are some major things that you really need to be thinking about we talked about efficiency, but as you're like looking at growing from 50 to 100, that's a double in size, right? What are some major things you need to start thinking about at this stage strategically for the future growth?
Yeah, and it's not uncommon to see exits at this level, right? You start getting to a certain level of what we call Ebitda, and we'll talk about that in just a moment. A certain level of Ebitda, it starts becoming very attractive for companies to acquire you. Obviously, you've done a lot of wonderful things, you and the team, to be able to put things in place. So I think it's really time to think about not only building just profitability for today. If we haven't, let's start thinking about enterprise value so we can optimize for that M&A perspective. And look, there's three basic things that start becoming fundamental and easy when you look at valuation, right? So we're looking at enterprise value, so we talk about valuation, right? So really the inputs to that, just if we're looking at a high level, EBITDA, in the case of like software revenue is a popular metric. So how do you maximize your revenue? How do you maximize your EBITDA? And we'll talk about what EBITDA is in a moment. Then it's going to be the multiples. So that EBITDA or adjusted EBITDA is multiplied by some multiple. And that's just determined based on the value of the company and what people see in the company. And there's ways to effectuate that multiple. It's not something you can just do tomorrow. It's something that you've got to do very strategic over a long period of time, but really should be looking to how do we maximize those multiples. And then we talked about adjusted EBITDA. There's things called add backs. So if you look at, say, a privately held business or something that just went really awkward in a business, buyers and lenders are going to want to look at, well, what does it normally look at? Okay, hey, there's a one-time blip, we get it. And those are add backs, right? And so you're going to want to start identifying those as well. So whenever you're talking to external parties, they understand those anomalies or adjustments maybe for privately held companies.
As businesses grow, what's another way that they can add enterprise value to their enterprise?
Certainly. And even before that, we should probably talk even maybe a little bit more about Ebitda,
Oh, yeah.
just so we can understand the effects on the multiple, right? So Ebitda stands for earnings before interest, taxes, depreciation, and amortization. So guys, look at the bottom line and net income and add those things back to it, you get Ebitda, and this is a language that people talk about. Some people look at it as profitability, but there's investment decisions that get taken out of that, such as borrowing for new equipment. Those affect your interest and your depreciation and amortization, certain tax things that are going on. So it's important to maximize your Ebitda, which is probably what you're already doing. That's typically where most businesses focus is what's the bottom line. But when we look at being able to build your multiple, so your Ebitda times your multiple, there's, again, we could do another video on this, but just hitting very high level, there's things that you can do, like building, like developing and protecting your trade secrets, right? The brand equity that your company name has. I mean, look, Pepsi or Amazon, these are all recognized names because they've built, Apple have built a lot of brand equity. Looking at some of these other intangibles, do you have patents in place, trademarks to protect that intellectual property? Do we have a recurring revenue model, right? Do we have to go recreate our P&L every month, or do we have recurring model that affects your valuation? How do we diversify? And one of the things you really want to watch out for is make sure you're not in concentrations. Look, if big box companies are 90% of your revenue and it's three of them, well, what happens if that big box company has a problem? And it will hurt you in valuation. There's a lot of things that you can think of in how you affect your multiple, but it's got to be very strategic in nature.
As a business owner at this point, they made the decision, I want to exit. What are some things that they need to do to plan that?
Well, exactly. Exit planning. And I think you've heard me say in prior videos, I mean, the time to plan is now, right? If not, the time to plan is now. And look, you're probably going to want to start thinking about what exit do you want to obtain. If you go private equity, someone comes in from a private equity firm, there's some pluses and minuses to it. One thing is you get a second bite at the apple. Some people look at that as a pro and a con. It just depends on how much value that they add. The other thing is they're going to bring in a professional management team that might be different or run things differently than the way things have always been done. Some people like that, some people don't. That becomes important to start understanding that, because again, you want to start getting in the right circles for this exit. The other one might be a strategic buyer. So someone in your industry, whether it's a horizontal integration, a vertical integration. We've talked about acqui-hires. So those are things that from a strategic basis, you're going to want to look at and maybe position yourself slightly differently, maybe than even a PE firm. The other thing is ESOPs. So a lot of business owners, especially ones that don't typically have a high multiple, there's great tax advantages in the ESOPs. It goes back to the people that got you there. But again, there's going to be different levers and things like that you're going to want to press. And even probably the most apparent one is an IPO. If you want to exit eventually with an IPO, this is usually for larger companies because there's a tremendous amount of compliance cost and process and reporting that goes in place. you're going to want to start setting that stage as early as you can, because those disciplines are highly scrutinized and for the right reasons.
Hey, there's two acronyms you use there. You used ESOP and IPO. What do those stand for?
An ESOP is an employee stock ownership plan. Basically, what you're doing is you're selling the business to the employees of the business. Obviously, employee ownership is one thing in the United States that everybody talks about and talks highly of. The other one is IPO, which is initial public offering. So instead of offering the company to the employees, what you're doing is you're selling it on the open market. So this is the stocks that you normally see that are out there, and that requires registration with the SEC. There's a tremendous amount of filings that go along with that. Once you become public, there's the 10Ks, 10Qs, 8Ks. I mean, it starts becoming alphabet soup of everything that you need to report. So that way your shareholders are timely informed. And that becomes your fiduciary duty as a CEO or CFO of a public company.
So we've talked about people, process, systems, and we've even talked about the strategic layer really within a business from 50 to 100 million. Is there any parting words that you want to leave us with for this stage of a business on 50 to 100 million and how accounting and finance can help them grow their business?
Absolutely. One thing I would say is a lot of business owners and people are so focused on the business. Make sure that you take time for the personal as well. And I'm not only talking about vacations, but I'm talking about planning your personal life and what that may look like after an exit, what you're doing with your management teams and looking at those things, because those are just going to benefit you in spades. But, you've done a great job growing the business. Make sure that you're looking at the personal side too.
Wow, that's awesome. Thanks so much, Eric. And this was from 50 million to 100 million as part of our series from startup to $250 million, how to use accounting and finance to grow your business. Thank you for joining us, and we'll see you next time.
Take care all.